Is JD.com the e-commerce giant poised to dominate the market, or is it facing challenges that could impact its stock? Today, we're diving into the numbers that matter, including key performance trends, financials, and what analysts are saying. By the end of this video, you'll know if JD.com is a buy, hold, or sell. Let's break it down. Before we get started, make sure to hit that like button if you love these in-depth stock analyses, and don't forget to subscribe for more investment insights every week. JD.com is currently trading at $40.95 per share, up a solid 18% year to date. But that's not the full picture. Over the last 12 months, JD's stock has fluctuated significantly, with a low of $21.18 and a high of $47.82. This kind of volatility is nothing new for JD as the company navigates the highly competitive e-commerce landscape, especially with rivals like Alibaba and Pinduoduo hot on its heels. So, what's driving the price movements? A combination of JD's solid financial performance, an expanding logistics network, and macroeconomic factors like inflation and interest rates. The market seems to be weighing JD's long-term growth potential versus short-term market conditions. Let's dive into the key financial ratios that paint the picture of JD.com's financial health. First up, JD's price-to-earnings (P/E) ratio is sitting at a relatively low 12.96. This indicates that the stock might be undervalued compared to other growth stocks in the e-commerce space. Could this present an opportunity for value investors? Definitely. Next, let's talk about JD's price to free cash flow (PFCF). This ratio helps us understand how well JD is generating cash for future expansion. Although PFCF numbers are still pending, JD's efficient logistics and tech investments position it as a cash-generating powerhouse. What about earnings growth? JD is expected to see a whopping 130% increase in EPS growth this year. That's a significant uptick and a strong indicator of expanding profitability. Now, the company's return on equity, ROE, is looking strong, signaling that JD is effectively using shareholders' equity to generate profits. With a debt-to-equity ratio of just 0.18, JD is well positioned to handle its liabilities. Its financial risk is minimal, which is excellent for long-term stability. Finally, JD's current ratio is healthy, showing that the company has the liquidity to meet its short-term obligations without any stress. Let's look at the technicals. JD.com's stock is currently testing support at the $40 level, with resistance just shy of $42.50. These levels are critical for short-term traders and long-term investors alike. If JD breaks above $42.50, we could see a price surge towards the next resistance level around $45. On the flip side, if the stock drops below $40, it could revisit the lows near $37, signaling a potential pullback. Momentum seems to be leaning bullish right now, with positive earnings reports and growth forecasts driving investor sentiment. But keep an eye on those levels, they could be key in determining the stock's next move. Now, let's talk about the moving averages. JD's 20-day simple moving average, SMA, is currently above its 50-day SMA, signaling short-term bullish momentum. However, the 200-day SMA is still far above the current price, suggesting there's a longer-term upward trend, if JD can break out and maintain its gains. If JD stays above these key moving averages, it could signal a continuation of the bullish trend, but if it falls below the 50-day SMA, we might see a more bearish outlook in the near term. JD's most recent earnings report shows impressive growth across the board. The company posted an EPS of $1.19, which beat analysts' expectations by a solid 20%. Revenue increased by 8.7% year-over-year, topping $45 billion. This growth is driven by its continued dominance in China's e-commerce market and its investments in logistics and technology. Not only did JD beat EPS expectations, but its profit margins are also expanding, which bodes well for future performance. This was a solid quarter for JD, and if they continue on this trajectory, we could see sustained stock price growth. JD.com operates in a fiercely competitive e-commerce space, going head-to-head with giants like Alibaba and Pinduoduo. So, how does JD measure up? While Alibaba is expanding aggressively into cloud services and fintech, JD.com is doubling down on logistics and automation, key areas that give it a competitive edge, especially in China's rapidly evolving retail sector. JD also has a stronghold in next-gen tech, such as AI-driven logistics, setting itself apart from competitors who may be slower to innovate. However, JD faces challenges from the rising competition in both the domestic and international markets. While it has a strong position in China, global expansion remains a key area to watch. Let's see what analysts are saying about JD. Currently, JD has a moderate buy rating from Wall Street analysts, with a consensus price target of $41.71. This suggests there's still some upside potential from its current price of $40.95. Recently, JD has been upgraded by several analysts due to its strong earnings and growth trajectory. With its low P/E ratio and strong EPS growth, it's not surprising to see analysts remain bullish on JD's long-term prospects. There are several news events and market factors that could move JD's stock in the near term. First, JD is gearing up to announce its Q4 2025 earnings report on March 6. A strong earnings report could push the stock higher, but any surprises could lead to volatility. Also, keep an eye on macroeconomic factors like inflation, interest rates, and government regulations. Any changes in China's regulatory environment or global trade could have a significant impact on JD's stock price. So, what's the final verdict on JD.com? Based on the strong earnings growth, undervaluation, and positive analyst sentiment, JD looks like a strong buy for long-term investors. However, short-term traders should keep an eye on key support and resistance levels, as volatility is still a factor. JD is an intriguing play. If you believe in its long-term growth potential and its ability to continue innovating, it could be a great addition to your portfolio. What do you think? Is JD.com the next big winner, or do you think it's facing too many challenges? Drop your thoughts in the comments below. Don't forget to like, subscribe, and turn on notifications for more stock analysis. Disclaimer: remember, this is not financial advice. Always do your own research before making any investment decisions.